We got to talk about this. I made a community post a couple days ago talking about this crazy deal that's happening with Hertz. Yes, that Hertz, the rental car company that declared bankruptcy just about a year ago, was deeply insolvent. You had the likes of Carl Icahn selling out for something like 75 or 78 cents a share, and now it's well above $6, nearing $7 per share. What on earth is happening with Hertz right now? Well, this is happening. Hertz selects $6 billion bid to fund Chapter 11 exit. Chapter 11 being the bankruptcy code in the US. And usually what happens in a Chapter 11 bankruptcy is the business will somehow reorganize its debts, and rather than have to sell off everything, typically shareholders might get wiped out, and then debt might get restructured, and then the new company will come out, issue new shares, and kind of get a sort of fresh start while using kind of the same core business. That's usually what a Chapter 11 means. This is different from a Chapter 7 where the business sells off everything. It's just a fire sale trying to pay creditors back as much as possible. And some of that can still happen in a Chapter 11, but typically the goal is to try and create something that will benefit creditors more in the long run by allowing the business to continue to operate. But for months, Hertz itself said it was very unlikely that shareholders were going to get anything, but as you can see here by the subtitle, revised proposal would pay all creditors in full and provide substantial increase in the recovery to shareholders, which is completely unexpected, at least for the general public, including myself. I would have never guessed that this was actually going to happen. They were saying that it probably wasn't going to happen since they were so deeply insolvent, but they clearly got this miracle bid, and well, tip of the cap to you speculators out there. I mean, I did a whole April Fool's joke about buying short-term options for Hertz that would have expired a couple weeks ago, so it's nuts to see that those probably would have done great, since the stock is up over 200% just in the last few weeks since mid-April. But let's take a look at some of the details here. Under the revised proposal, Hertz's Chapter 11 plan will be funded through direct common stock investments, so they're just buying up the shares, aggregating $2.78 billion in the issuance of more preferred stock, and a fully backstop rights offering to the company's existing shareholders to purchase $1.6 billion of additional common stock, so even more gravy for shareholders. The revised plan would provide for the payment in cash in full of all administrative, priority, secured, and unsecured claims in the Chapter 11 cases, and would deliver significant value to the company's existing shareholders. So they're paying off all the debt, or nearly all of it, as we'll see in a second, but it's just kind of nuts, because whatever this firm is, KHCA, they think that Hertz has enough value on the back end that even after paying this pretty penny to pay off basically all the debt, unless the creditors are giving them a huge kickback or something, that they think that this investment is worth it. So much so that they're actually paying a premium to give shareholders money that they probably never would have expected outside of the handful of speculators that were in there. Moving down with the announcement a little bit, as with another group's bid, the KHCA group's proposal would eliminate approximately $5 billion of corporate debt, including the complete elimination of all corporate debt on Hertz's European business, and provide the company with over $2.2 billion of global liquidity. So it's a miracle deal, if you have to ask me. That it's wiping the debt, or nearly all of it, all the debt that was probably giving them all the problems in this bankruptcy in the first place since they were insolvent, and it's the creditors are walking away with something. I don't know if that's debt in full, like creditors haven't slashed any debt down to provide maybe a slightly better deal. I'd imagine not, if shareholders are still getting money. So this is a lot of money coming in to save Hertz. I'm sure they're anticipating, with the globe opening up more, with the vaccines rolling around, that Hertz and other rental car companies, the rental car industry in general, will probably be doing much better than it did in 2020 versus 2021 right now. And maybe that will be the case. That's the risk, of course. Or perhaps there's some assets that are hidden within Hertz that could somehow be revitalized and then sold off for a profit. Maybe this is a shorter term play. I don't know exactly, but the CEO, Paul Stone, Hertz's president and CEO, is very excited about it. He says, "We are very pleased that our plan process produced such a tremendous result for our creditors and shareholders." You don't say. "We appreciate the strong interest in Hertz from the competing plan sponsors and thank them," yada yada. And down here, our proposed plan provides a robust recovery and excellent value for all of our stakeholders and enables Hertz to emerge as a much stronger, more competitive company. I mean, yeah, you're wiping out a bunch of debt, so sure thing. During our restructuring, we have made material improvements to our operational efficiency by selling off a bunch of stuff, and have built added cost discipline into our business. Now we look forward to implementing our Chapter 11 plan, which will substantially strengthen our financial structure by eliminating almost 80% of our corporate debt. We are well positioned to take advantage of increasing global travel demand and new long-term growth opportunities. We're excited about Hertz's future and the benefits for all of our stakeholders, including our employees and customers, as well as investors, franchisees, and business partners. So there you have it. They're very excited about it. It's wiping out a bunch of debt. They're going to be a lean machine, potentially, since they've been selling off potentially wasteful assets or parts of the business that weren't doing well, since they have been in bankruptcy for about a year now. So it's been a while, and they've been on the decline since they've had so much debt with comparatively little equity going back before the pandemic as well. They were in trouble pre-pandemic, and then once the pandemic hit, that was kind of the death knell. But they have been revived. They have been revitalized by this massive influx of cash from this bidder, and clearly the creditors are okay with it. However, this still needs to make it through the actual bankruptcy court and bankruptcy proceedings to be approved. The restructure plan is sort of this concert between creditors, the actual business, the court, and then any other interested parties, trying to figure out what is the best solution long term to maximize value for everyone, with creditors being the priority here, since they're the ones who are being threatened to get wiped out, and they're supposed to be first in line as opposed to shareholders in something like this. I have no idea about the fine print on this agreement, as well as I don't know what the court's actually going to approve. I don't know if they're going to allow shareholders to actually be paid out here, since they're getting a substantial amount. I saw something as high as like $8 per share is what people can expect to get paid out as shareholders through the reorganization, which is a lot considering the stock was trading for just over $1 a few weeks ago, I should say, when I made my April Fool's video. That now would have been a fantastic investment, it seems, because there's certainly a chance that parts of the plan are altered significantly or don't go through, or maybe the whole plan is scrapped. It's hard to say, since it still has to get through all that stuff. And you can see that here at the bottom of this announcement. If the bankruptcy court approves the revised agreements with the group at the hearing scheduled for May 14th, the company would terminate its agreements with its existing plan sponsorship group, which remain in effect, and execute the new agreements with that group. So they have to still get through this whole process, approve the plan, then actually execute the plan. There's other steps to this process. It's not all set in stone, but it's looking pretty promising. Clearly, someone's throwing a lot of money into Hertz, and that's going to probably satisfy a lot of creditors, which is the big party that you're trying to satisfy in a bankruptcy proceeding. A court hearing to confirm Hertz's plan of reorganization is scheduled for June 10th. So I guess that would be the date that we'd know for sure that this is going to go through as is, or if it's going to be changed, I would guess. But it seems like they're pretty confident that this is what's going to happen. Otherwise, I doubt they would be saying all this about it. And granted, you never know what's really going to happen in the stock market. I mean, this whole thing is a textbook example of that, which brings me to what I want to talk about here as kind of a lesson to take away from this Hertz situation. That's really the difference between speculation and investing, or long-term investing, which is really what I focus on in this channel, is long-term investing. And some of the speculative stuff is definitely entertaining, and it's just kind of crazy to see what happens. But even though speculators made out like bandits here, this was a fantastic speculation. If you were in Hertz at $1 or less, look how much money you've made very, very quickly with really doing nothing. It's now up to like $7 a share. Might go even higher. Might go beyond $8 a share if people are bullish on Hertz now that a lot of that debt's going to potentially get wiped away. So speculators, again, tip of the cap to you. You guys did great. But that doesn't mean that this was the likely outcome. And that's the hardest thing to come to terms with any sort of investing, is hindsight is 20/20. I will never ever concede that this was the most likely outcome. This was very unlikely. Even Hertz itself was saying that people were probably not going to get paid out. Of course, it still was a possibility. And depending on how you discount that risk, it still might have been a worthy investment or worthy speculation. It's all up to you. Beauty is in the eye of the beholder, and risk is based on your risk tolerance and risk preferences. And that's going to determine how you price things accordingly. So if you thought that the 1%, 5%, maybe a higher percent chance that something like this was actually going to happen was worth whatever price compared to your payoff would have been, then yeah, you make the investment, you make the speculation. So it's all a basis of risk. But going in blindly and expecting that every bankruptcy now is going to turn into this, that is a very, I'm not going to say sound strategy. You have to go for what the most likely outcome is. And if you're going for an unlikely outcome, you really need to discount it significantly. Of course, you can do whatever you want. This isn't investment advice by any means. If you want to gamble, go ahead and gamble. I mean, it's your money. Do whatever you want. Just don't be surprised when you lose a bunch of money if something goes wrong, since a lot could have gone wrong here. And there still is quite a bit that could go wrong since this isn't actually completed yet. They still have a ways to go to get through this whole thing. And a lot could happen there. And the court could do something funny or whatever. Or even this group, I don't know if they could just back out. I don't know what the fine details here, how much money's already on the table and what's already being paid out. I don't know, as I don't have that agreement in front of me. This is just Hertz's announcement. But compare this bit of speculation to more long-term investing, and the fundamentals are rather similar. You are trying to make a bet on the probability that something is going to happen. If you're investing in a company for the long term, you're betting on the probability of its cash flows or profits or whatever growing to a certain level over the long term. At least that's what you probably should be doing for the long term, since, again, if you're just buying companies blindly, that's gambling and speculation in itself. You're just going in blindly to something, and you might as well roll the dice. Or it has famously been studied. If you're just going to pick companies randomly, why not have a monkey do it for you? It's probably going to do better. And even with the Hertz deal, if this deal actually goes through, everything's good, there's no guarantee that Hertz is going to survive as a long-term company. The rental car business might be out of date by now. Who knows? Or Hertz's structure just might not be worth whatever it is shareholders are paying right now, or whatever this group is paying right now. It's hard to say exactly what's going to happen to Hertz, but maybe you think it's still a worthy investment for the long term. So you're going to factor in what you think it's going to grow at, how much profit it's going to make. You're going to discount that appropriately for the future to factor in other sorts of risks. And then you come up with your valuation. That's the basic way that a lot of investors do it. But just YOLOing and crossing your fingers, hoping for some miracle deal like this, unless you have insider knowledge, of course, in which case you might be dealing with some illegality there. But if you're doing things by the book, doing them legally, of course, as you always should, then all I can say is you have to be careful. That's with long-term investing or speculation, but realize what you're doing in any event. If you're hoping for a very short-term event that has a low likelihood of actually happening, then you're definitely speculating, and it might not happen. If it doesn't happen, then you're out a lot of money. You have to be ready for that if that's what you're doing. And of course, you can also be paid out handsomely, like the Hertz speculators are doing right now. Or if you really believed you're a long-term investor, you thought this was the likely outcome, then okay, I mean, suit yourself. But you just have to weigh those probabilities when you're investing is kind of the central thesis I'm getting at here. So if I could go back in time and make a speculative bet, knowing what I know now, of course I would do it. But if I didn't know what was actually going to happen in the future, I'm happy with the decision I made because I did not think this was the likely outcome. Your decision might have been very different, of course, and that is the beauty of the investing game. But anyways, that's all I've got for today. If you like this video, definitely like it, since that would help the channel out a lot. And if you like this sort of content about investing and the stock market and pretty much everything as it has to do with personal finance, then definitely subscribe, since I put out new videos every single week and wouldn't want you guys to miss out. And check out all the free stuff and the affiliate links in the description below. That would help the channel out a lot as well. But until next time, take care.